Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar was little changed on Wednesday, but early morning Thursday has edged higher as the environment around a calmer geopolitical environment, with the ceasefire announced late Monday between Iran and Israel holding after 2 weeks of conflicts. Meanwhile, market attention centered on Fed Chairman Jerome Powell's testimony on the second day of his Capitol Hill appearance. Powell reiterated that the Fed is not rushing to cut rates and is waiting more on data and on the impacts of tariff. A very familiar story, as Powell has been saying this all along. He noted, however, unprecedented nature of the tariff situation makes inflation analysis especially challenging. Meanwhile, Donald Trump said on Wednesday he was considering candidates to replace Powell when his term ends, amid ongoing disagreements over monetary policy. Meanwhile, on the Australian data front, yesterday, Australia's monthly CPI, or Consumer Price Index, showed further easing, dropping from the 2.4% to 2.1%, giving further speculations that the Reserve Bank of Australia may cut rates as early as July. But that's already been priced in and expected. Investors now focus on the US inflation concerns driven by the tariffs, with May personal consumption expenditures, the PCE index, which is the Fed's preferred inflation gauge, due on Friday. Along with that, we also get the GDP. When we turn to the technicals, the market is getting very close now to this key level of 65.40.45, and a break above there could see stops triggered and rally on to 66 to 66.65 as initial target, with any weakness likely to find support around 64.30 to 65. Turning to the euro, the market has rallied to its highest level since October 2021 as it surpasses 116.50 on Wednesday and now looking towards the next target of 117.10.40. The move supported by easing Israel and Iran tensions, and along with that with a broad US dollar weaker as it sits at 97.30 seen by the USDXY. As I mentioned, with the Fed expected to lower rates this year, Powell told the Senate that the monetary policy remains appropriate, but uncertainty persists regarding the impact of tariffs on inflation, noting it's challenging to predict who will bear the cost. Also, on the geopolitical side, President Trump announced a US-Iran meeting next week and warned that renewed attacks would follow if Iran resumed nuclear weapon developments. Also in the Eurozone, the July GfK consumer confidence is due, so keep an eye on that. We've still got a bit more data, especially with the PCE, but with the top side still very close at 117. Let's see if the dollar does drop through 97.30, which could see further risk to the upside and send euro on to when we look at the monthly charts of 118. And even keep in mind that we could even get to the highest seen around July 2020, which is around 121, 122. Very bullish, but I do like the way these technicals are set up, and there's no pullback as this trend remains strong. The dollar yen back on the downside again after a brief move to the upside failed, giving it all back, and now weighing on the support at 144.80. A break beneath there could give further scope, triggering stops down to 144 with the initial target seen at 142. Bearish technicals in play does limit any gains to the upside. A further rally in sterling as it now moves closer towards the level of 137 that could stretch to 138. I do like this pattern, but we are getting a little bit overbought, but nevertheless pullbacks are likely to be limited. The gold situation has paused as it gets towards the support area seen around 3,300 figure 15, and with the minor support above at 27 may see a little bit more development to the upside, and if so, a break above 44 could see a rally back to 3,356 to 61 and reassess and see if there's enough movement in the indicators to support a rally onto 72 to 76. Wrap it up with all, the market was unchanged, but nevertheless still expecting to hold a neutral bias. I'm a little bit uncertain in how this market's holding, but if we drop this support in here, where all these tops are, you can see why the market's paused somewhere around 63.5 and may therefore see a slight recovery. But I like to keep a neutral bias until we get a little bit more to the technical side of confirmations and where this market can actually go, as there's still risk to the downside and a strong bounce could come through to the upside. So hence due to the uncertainty, I would rather sit out for the moment. Well, that's a wrap. Thank you for joining me. As always, look out for the interest rate report, and I hope you enjoy the great start of the day.